Hello and welcome to the Technical Day Trader. In today's video lesson, we're going to be looking at two day trades, one held overnight and one which I got in and out of today. One going short and then one going long. We'll start with the short one, and that has to do with yesterday. Now I'm looking at the FAS, which is the Direction Daily Financial Bull 3X. So it's a leveraged ETF, meaning it's supposed to move three times whatever the value of the basket of bank stocks that it has. The average of that, it'll move three times that average. So first I'm going to look at yesterday, and my Thinkorswim app makes me say, hey, let's look at 4 days. And what I have overlaid over the price right now is pivot points, which I do every single day. They're fantastic for defining daily support and resistance levels, so I have those overlaid. And I'm just going to start by looking at yesterday. And basically, the day started with a bearish bias. When it opened, it traded up real quick, but then quickly started selling off. And then this is your pivot point line. That's the typical price from the day before, which is the high, the low, and the close. The average of the high, the low, and the close. And it traded and it sold through that. So usually that's an indication that the day in its entirety will be a bearish day. It's been a while since any ETF or any index, for that matter, has had a seriously bearish day. So, kind of looking for it. And once it broke that pivot point, I was looking for opportunities to get in all day, and you can see that basically for the better part of the day, when it was coming down and hitting the first support level, it was getting, you're getting little volume spikes. People are buying in. It's not getting back to the pivot point for the day, but they're buying in, maybe taking small profits. And you get a bounce off the support line. This one actually touches. You see a volume spike here, so people bought it right back up. And then it came back down, and you get another spike up. People trying to get in at the very lows if there is a bullish move. But as that's happening, you're seeing a succession of lower highs as these little bounces are happening. So I'm looking for something that I can define my risk with and get in and out of a position comfortably. And what happens is eventually it breaks through that support level, and usually you get big volume and big red bars when that happens, when you break the support levels. But it was, immediately bought back up on volume and sent back through that support level, and it's dancing around. And this is where I noticed, okay, I have an opportunity to go short with a defined risk profile. And the reason for that is because if you look at this right here, that can be a shoulder. You have a lower high, and then this is your big high. And when it came back down through and sold there, first thing I'm thinking is head and shoulders pattern, and I'm going to connect this neckline. Even if it doesn't end up being a head and shoulders, I'm going to connect those 2 points and send it out and make a little trend or a neckline for myself. And now I'm comfortable, because after it is unable to make another high, the head and shoulders is almost complete. It completes itself by breaking that neckline, and a man by the name of Bukowski back in 91 to 96 studied a lot of different chart patterns, and when the head and shoulders closes a bar below the neckline, it has an astounding 93% chance of continuing lower. I believe the average descent was like 11 to 16%, but let's not talk about that now. Let's stay focused. Okay. So now that I have this head and shoulders pattern, I got the little trend line necked out. I'm comfortable at putting an order to go short in at this support level. So it's 143.34. And what I'm going to do is, the reason why I have a defined risk is because I'm going to take this last shoulder here, and I'm going to put my stop loss right at that shoulder. So I have a very tight stop, because if it trades above that shoulder a lot, or higher than the head, if it trades above the shoulder and higher than that head, the whole pattern is null and void, and I was wrong. So I have a good inclination that it's heading lower, and I've defined my risk. I've got my order in to go short, and I've also got my stop loss. Now this one was such a violent downturn due to the fact that the market hasn't been able to take a break to the downside and kind of reignite itself for a while. It was such a violent downturn that I was okay holding it overnight. So this morning, I got out of my short position almost when the market opened. I think I got out right at this support level right here. And then what I'm doing is, because on this day, and let me give you a little better perspective here, on this day, the support line, because of there was such a violent downfall the day before, the support line is never touched, or the pivot point line is never touched. And what is the only thing that it dances in between two today, because it's a gap down, is support 1 and support 2. So I'm looking for a way to get in long that I can again define my risk and be able to put an order in with a tight stop, and if it goes my direction, it's a beautiful thing. So I was watching it all day long, and just kind of over time you get experience with these pivot points, and the fact that it twice, not only, I mean, it broke through, but it sold down through support 1, and then it actually was unable to make it through support 1. So now I'm looking for a bounce off support 2. I know most likely it's going to get there within the day. It might take a long time. It might take, to the very end of the day, which it pretty much did. But from experience, I know there's a good inclination that support 2 will be tested because we're unable to get through support 1. So all day I'm waiting, and finally we get the touch. Now, what happens is usually, especially on support 2, because that's the last pivot point support line, is it usually doesn't trade below this unless there's big economic news and you get a gap down, then the whole thing's a wash. But you usually don't go below support 2. So it gets support. And now I'm looking at this, and I'm saying, okay, well, we could potentially have a little inverse head and shoulders going on here. And I'm pretty sure that it's going to bounce off this, especially with the volume accumulating. Buyers are coming in at support 2. And so when it rockets up, I'm pumped, because when it got to that level and it sold off again, I'm saying this has got inverse head and shoulders written all over it again. So what I'm going to do is I'm going to draw that neckline trend again, that neckline for the head and shoulders, and regardless of what the shoulder 2 does, what I can do is I can put an order in right at, or sometimes like a penny or two above or in this case, above the neckline, and then I can put my stop loss very, very tight, because when it breaks that neckline, usually it's a surge. It's either a buying surge for an inverse head and shoulders, or it's a selling surge for a regular head and shoulders. So I was able to get in here. I think I actually put it directly at 145.81, and then I had a stop loss put in at 5 cents behind that. And as you can see, that right shoulder, it shot through the inverse neckline, and I was able to not only get in with a tight stop loss, I also had my target for the day, and that's support 1. It needed this inverse head and shoulders to refresh the buyers and give them a chance to get in. I was one of them, and I was able to do it with a defined risk, and I was able to capture. Let's see, 145.83. It was a dollar plus move, and the thing that it's great with the Thinkorswim platform is I can actually put my sell orders in, and it will show me exactly where they're at. So I put my sell order in at 147.37, and I got in at 145.83. And this is just technical day trading in its entirety, and you gotta love it. Using your mind and using the knowledge that you have. There's no more rewarding way to make money. All right, well, that's pretty much it for today. I just wanted to kind of show you the duality of yesterday I was a bear, today I had the opportunity to be a bull, and you kind of as a day trader, you need to be able to change those mantles. You